10-year note yields had a very busy day to start the week. We saw yields move all the way down to 366, the lowest we've seen since June of 2023. Although we did see yields creep back higher in the afternoon part of the session, getting all the way back to 378, just shy of unchanged. So after a big move lower, we retraced higher. Now the move lower was prompted as Japanese equities opened lower. We saw that bleed into Europe and then the United States. It was a risk-off trade. We saw treasuries get that flight to quality bid, pushing those yields down to the lows. However, into the afternoon, it seemed that while stocks were still lower on the day, we saw that flight to quality bid start to ease back. Again, seeing yields rise up to 378 and closing after seeing a big move lower, closed near unchanged at 378 on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will see that volatility made a huge spike higher as yields were making that push lower. As yields crept back higher, getting back to unchanged on the session, we did see volatility coming up, but still remained higher on the day. One interesting thing to note, going back through the month of July, we had 4 double-digit yield ranges, day ranges, I should say, in the entire month of July. In the first 3 days of August, we have 3 double-digit yield days. So as you can see, given the fact that we had a busy week last week with FOMC and non-farm payroll, we start this week off with Fed rate cut expectations all over the map, as well as rising geopolitical risks. That has given the market that bid to volatility that we just talked about. Lastly, let's talk about what we have tomorrow. Tomorrow's Tuesday. It is a quiet data day. We have the trade balance numbers early in the session, followed at noon by a $58 billion 3-year auction, and then it's going to kind of be the after effect of what we've seen over the last several sessions with these wider ranges, the push lower in yields, and the rise in volatility.